Welcome to FX Street. We're going to be going over CRO crypto.com today and analyzing the levels that it really needs to get to prevent any further downside pressure and where it needs to go to attain a sustained bullish breakout. Before we get into that, though, I'd really encourage you to head on over to YouTube, to our channel, hit that subscribe button. Additionally, you can follow us on Twitter at FXS Crypto. So CRO, of course, not immune to the selling pressure that's been hitting every single risk-on asset around the globe. It's like risk-on markets just really needed a reason to, have some big pressure south, and it certainly has gotten it. What makes it difficult for a CRO to move higher here? Actually, before I get into that, point figure wise, there's a buy entry opportunity here, a theoretical entry at 42 cents even. So it'd be a buy stop or a buy limit depending at where it's at when people watch this. At 42 cents even, stop down at 39, and the target is at the top of the prior O column at 50 cents. It's probably will get halted around 49 cents, and we'll kind of get into the reasons why, because on the Ichimoku system, it's got some interesting zones to watch out for. So the bullish response yesterday was great, and there's some follow through going on early in the morning here, Eastern Standard Time. But to move higher, there's a huge cluster of resistance it needs to get above, and if bulls can push CRO above it, it's going to be a substantial move, because between 43 cents and 46 cents, you have 3 out of the 4 Ichimoku levels and the 2022 volume point of control. So you've got the bottom of the cloud Senko span A at 43 cents. Then you have 44 cents. You have the Tenkan Sen, 44 and a half. You have the 50% fib retracement. And then at 46 cents, you have the Kijin Sen and the 2022 volume point of control. Really, what CRO needs to do is have a daily close inside the cloud that would help prevent a lot of the bearish momentum that may occur, because if it gets rejected against the bottom of the cloud, that could be a recipe for disaster, and it could just be a sign that this is just a pullback and a larger downtrend, and that you could see a bearish continuation move lower, likely into maybe not that low. Well, actually, yes, because the volume profile below 35 cents is almost non-existent, and the 2021 volume point of control is all the way down here at 18 cents. Not suggesting it gets that far, but it certainly could. But the level that CRO really needs to get to in order to have a sustained bullish breakout, something that is more akin to what happened back in August of last year, it needs to get back above Senko span B, and needs to get back above the cloud. That's ultimately the zone that it needs to target. But again, there's a substantial amount of resistance there too. The Senko span B is the hardest level to cross, above or below than the Ichimoku system. And then you've got this the 382 fib retracement from this swing, and then the broader the 382 fib retracement from the all-time high to the strong bar of the move, and then the blue here is the smaller swing. Actually, reverse that. It's the other way around. But anyways, you have the 618, the 382 at 53 cents even. Just below that is Senko span B at 51 cents. So it has a tough road ahead of it, but it's not insurmountable. Structure-wise, it looks like it's created at the higher low, and if it's got enough momentum oscillator-wise as well, I would just be very careful about what happens with the composite index here as well. If it moves above the peak here on February 15th without creating a new high or higher close on the candlestick chart, that'd be hidden bearish divergence, and that could just trigger, again, some more selling pressure. But oscillator-wise, in the relative strength index, it's in bear market conditions. But where it's currently at and where price is currently at, there's a pretty good case for it to move above the bottom of the cloud to at least the Kijin Sen and possibly close in that zone. We'll have to see what happens. Anyways, downside risks should be limited to the 618 at 37 cents. Upside potential is likely limited to the 50 cent range. That does it for me on CRO from all of us here at FX Street. Thank you for watching. Please don't forget to like, comment, and subscribe.